IPOs, initial public offerings, spiked after the pandemic when rates dropped to near zero, and now rates are dropping again, and we're starting to see these IPOs pick back up. Now, an IPO, an initial public offering, is the process by which a privately owned enterprise is transformed into a public company whose shares are traded on a stock exchange. This process is sometimes referred to as going public. After a private company becomes a public company, it's owned by the shareholders that purchase the stock. Now, are IPOs a good investment strategy? I take a unique approach on this and will share my strategy in a bit, but let's first talk about an article that I got from S&P that shows a trend, and I think many investors get very excited about IPOs, as they should. This brings opportunity to invest in new, possibly high growth companies that can change the economic landscape if successful. I say if. So the global IPO activity is slowly recovering from the lows of earlier this year, but transactions are well behind the pace of recent years. There were 326 IPOs worldwide in the third quarter, the most since the fourth quarter of 2023. However, those offerings only came to an aggregate of $23.32 billion, the lowest since the first quarter of 2019, according to the latest S&P Global Market Intelligence data. Though the first 3 quarters of 2024, there were 946 IPOs launched with $76.44 billion offered. You will see the first 3 quarters of 2023 when 1,061 IPOs were launched, offering an aggregate of $95.76 billion. These numbers are well below the peak of IPO activity in 2021, when through the first 3 quarters of that year, 2,355 IPOs were launched, offering an aggregate of $471.05 billion. So yes, looking at this chart, it's insane what happened right after the pandemic. It really cooled off, and we're seeing globally here that it's kind of remained stagnant since early 2023. And if we look at the US activity, it's recently risen since the end of 2023, with 36 IPOs launched in the third quarter, up from 35 in the second quarter and 25 in the first. There have been 347 IPOs since the start of 2022, which is 9 fewer than the number of IPOs launched in the first quarter of 2021 alone. So yes, again, I think rates really help dictate these IPOs, right? Businesses with lower interest on debt tend to really want to get out there and try being successful on the market. So we're seeing that tick back up now. And if we look at this, there has been $26.28 billion offered through US IPOs in the first 3 quarters of 2024, nearly double the $13.73 billion offered through the first 3 quarters of 2023. And then, of course, you see the insane numbers in 2021. Now, the largest IPO in the US so far in 2024 was for Lineage Inc., a real estate investment trust for temperature-controlled warehouses, which offered $5.1 billion in July. So after Lineage, with the largest US IPOs, we'll see UL Solutions, Waystar Holding, Rubrik, Reddit, which was a popular one, Astera Labs, American Healthcare REIT, Bright Springs Health, Ibotta Inc., OneStream. These were the largest IPOs so far in 2024. Now, if you're in the European market, I'll just show these charts briefly. This one's interesting. You'll see a big drop off in third quarter compared to globally and with the US ticking back up. So that's something that is interesting. And if we look at the aggregate amount offered, it is picking up in 2024 compared to 2023. But again, as with globally, the US and now in Europe, we can see 2021 was the shining star. So as with any type of investing, putting your money into an IPO carries risks. There are arguably more risks with IPOs than buying the shares of established public companies. That's because there's less data available for private companies, so investors are making decisions with more unknown variables. Before an IPO of a stock, an investment bank is hired to help determine the value of the company and its shares before they're listed on the exchange. For investors, it's not always easy to determine if it's a fair price or not. The best method to determine if a stock that is newly issued and has not traded previously on an exchange is priced appropriately is to analyze the company's financials, which can be accessed by looking at its registration documents and compare them to similar listed companies. In addition, understanding the various components of how an investment bank conducts a company's IPO valuation is important for anyone interested in becoming an early investor. So you'll see there's a lot of work that has to go in to kind of looking at the valuation and if it's deemed too expensive or not. You have to really dig through some financials through the registration documents, but that's not going to be anything compared to these established public companies that have decades of financials. Comparing them to the stock performance, there's a lot more to go off of. And then, like I said, you have to know the intricate, complicated details of how banks conduct the company's IPO and its valuation. In addition to the demand for a company's shares, there are several other factors that determine an IPO valuation, including industry comparables, growth prospects, and the narrative of a company. Sometimes the actual fundamentals of a business can be overshadowed by its marketing campaign. I think we've seen that with Reddit, with Tattooed Chef. These names get out there, they get lots of hype. And that is why it's so important for early investors to review a company's financial statements. Part of the process of launching an IPO is that the companies are required to produce balance sheets, income statements, and cash flow statements to the public. Again, you're not going to get this long-tailed history, but it's a start. One challenge of investing in IPOs is that the companies usually don't have a long history of disclosing their financial information, as I just stated, and they don't have an established trading history, so you can't see how the stock reacts to certain historical events with that company. So analyzing them using conventional methods can be impossible. So more so than not, IPOs tend to be a very expensive investment. And many companies after an IPO will trade down for a long period of time until investors are able to see years of performance on the market. And I won't say it's usually an initial downtrend. Sometimes that hype will keep the stock going for a while, but then we do usually see a downtrend because people are buying in pretty expensive. And once these numbers start coming in and the history of it, people start to say, hey, maybe I got in too high. We need to cool off at this. We're going to sell out, try to buy later if the price is right. So would I invest in an IPO? It's very unlikely unless I was really knowledgeable about the business and its industry. I would have to be very confident and have a high conviction of its future growth and its importance in our economy. I would have to see a case where it becomes a monopoly with a wide moat. Basically, I would have to put in a lot of research and analysis on my end for me to consider it. I know a lot of investors don't do this and just get excited about the name of a company because it's popular and they like their products and services, but that's not enough to go off of. And if we look at some examples of this, Tattooed Chef was a very popular one. In fact, many of you knew, if you've been on my channel for a while, that I invested in Tattooed Chef. I bought into the hype. I was following some YouTubers that were really promoting this as it's going to be a guaranteed moneymaker, and look what happened. This company went out of business. Now with this one, you'll see the hype happened for a while, but then it tanked afterwards and never recovered and never will. Then we have companies like Rivian, where right off the bat, they just kind of had a downtrend and haven't recovered since. Now Rivian, I think a lot of people had some hopes that this would be a company that takes off and be rival to Tesla, but we've seen that it hasn't. Amazon does use this company as part of its fleet, but that still hasn't saved it. So there's a good point. Even though there's a large company that is partnered with Rivian, it still has not saved this stock. Then we look at others like Allbirds. That one, again, is like Rivian. It just has not had any positives, very little in this chart actually, but if you bought at any point, you've pretty much lost money. And then there's the IPOs of this year. So I mentioned Lineage was the largest IPO this year. And though this doesn't have a lot of history yet, because it was just, a few months ago, we'll see it's already in the red, 6.36%. So not taking off maybe like investors would hope. Again, there's always a lot of hype with IPOs and you have to be very careful with that. Then we'll look at Reddit. This is the one outlier, right? So far, it's up 50%. Now, I will say it's still early on. It's only a couple months old, and we'll see with Tattooed Chef, it probably had a good year of going up before it tanked down. So just be very careful. This might be the hype still of Reddit. It's very popular. Lots of people talk about it. And I wouldn't be so excited to think that it's going to keep going up. There might be some massive downside risk. So if you don't invest in IPOs, how do you capture the new markets, those areas of new businesses, new products, new services that could greatly impact your portfolio in a positive way without the risk? Well, by investing in well-established companies is how I do it. You may be saying, how is an old established company capturing new innovations, businesses, products, and services? Well, let's look at Amazon, for example. This is a great example of just exactly how these established companies do it. Amazon is not just one company, it's made up of more than 100 subsidiaries and has made strategic investments in other companies and startups. Amazon owns subsidiaries in a variety of industries, including tech, media, medicine, and groceries. Some of Amazon's subsidiaries include Amazon Web Services, Audible, Diapers.com, Goodreads, IMDb, Kiva Systems, One Medical, ShopBop, Teach Street, Twitch, Zappos, and Zoox, just to name a few. Now, Amazon has had a number of new business ventures, including Amazon has Zoox that they acquired, and it's a self-driving tech developer for $1.2 billion in 2020. Aurora Innovation, they invested in them, and it's an autonomous driving developer to build autonomous vehicles for logistics. Rivian, as I talked about, they partnered with them, and that's the EV truck maker, and they're going to deliver 100,000 electric vehicle vans to Amazon by the end of 2024. So we'll see just how that number does come in. Then we have Embark, which they also partnered with, and that's another autonomous trucking startup to transport goods along an interstate highway. So you see how autonomous driving, which is a big thing that people are trying to find those companies, Amazon's doing that. You can invest in Amazon and get a piece of that pie. And then outside of that, you have Industrial Innovation Fund, which they've invested in robotics and automation startups that deploy technologies in warehouses. Then you have Anthropic, which Amazon invested up to $4 billion in for a minority ownership position in the company to advance generative AI. There's another big topic, AI. Lots of people are looking for these small startup companies. Well, you could do it through Amazon. Then you have Amazon Studios, which they are putting out shows. They're trying to rival Netflix. Again, this is getting another piece of a whole different business than what people normally think of Amazon for. You have Amazon Handmade, which is a platform for selling handmade and artisanal products. You have Amazon Business, which offers grants to small businesses. Basically, this is how I get my exposure to these new businesses, products, and services. And it's usually through acquisitions, through partnerships, through investments. And they're not the only one. Microsoft, for example, they have several subsidiaries that include LinkedIn, Skype, GitHub, Mojang, Aquantive, ZeniMax Media, Nuance, Activision Blizzard. That was one of their most recent acquisitions. And then outside of big tech, you have Vici, the real estate company, the experiential real estate company. They acquired Bolero last year, which is an up-and-coming new entertainment business. Of course, they have bowling, then they have gaming in there. It's really cool, and I think this one is going to spread across the country eventually. You have companies that you wouldn't think would be innovative, like S&P Global. They acquired Visible Alpha in February of 2024. I could go on and on of showing you examples of how these large established companies are the ones that are acquiring and doing all that research for us, these small businesses, these new products, these new services, these new avenues of possible growth. We just have to invest in the established company that's safer and has proven financial history and so on and so forth. So this is how I capture new businesses, products, and services. And I think people forget about how large companies acquire, partner up with, invest in, and create new businesses all the time. The benefit is these companies are rich in their financials. We can easily analyze their financial history, and if one of their new ventures fell, it's not a big deal. In the majority of cases, as they have massive income and free cash flow to take on these risks in case they fail, they will be just fine. It'll be a very small bump in the road for them. Whereas if an IPO company has any problems, it could mean the end of the company, hence tattooed chef. And investors lose out big time when things like that happen. Now, well-established companies can also weather economic hard times and make it out successfully, whereas most small businesses do not survive. So, moral of this topic is that IPOs are fun and they could offer explosive growth, but they are of high risk due to the high valuations and usually untested business models. Instead, I opt for the well-established companies that create, invest in, and partner up with those new businesses, products, and services. So if we look at my portfolio, this is the first time my portfolio has pushed above 30% in gains overall. So this is very exciting for me. And again, I'm invested in those companies that are giving me that exposure to these new businesses, services, and products like Microsoft and Amazon there, which is up near or over 70% in the green for me. S&P Global up almost 48%. Vici is up almost 13%, so on and so forth. This is how I get my exposure, and this is a safe way, in my opinion, and I'm still going to benefit massively. I mean, look at those gains in Microsoft and Amazon and S&P Global, and then my portfolio's growth is very healthy. So let me know if you invest in IPOs, if you have any success stories or horror stories. My horror story is Tattooed Chef. I've made several videos on that though, so I want to put it behind me, forget about it. Do you like my method of investing in well-established companies to capture that market? That's all for today. Thanks for watching, and we'll see you soon on Mark Arnold's Finance.